Okay. So let's start with the dollar. Obviously, we know, as we know, it tried to form some sort of a comeback on Friday, as we got closer to the U.S. session, and then in the U.S. session it did absolutely nothing and stayed quiet for the whole session, and it's opening kind of that way, but it's just a little bit lower. Uh, it will be very important that the dollar keeps above 102 for the future of uh, of the indices and gold and Bitcoin. So if somehow dollar again drops below the 102 mark, which is here, uh, we are going to see we are going to see uh, certain comeback on the markets and the Bitcoin and gold again. So I think, yeah, if it gets accepts this support and then moves back, channeling above these levels, these highs from Friday, and then moves back into the 103 fold. So, but what the price should target to do is to enter this zone. So when we are in this zone, I think it will be a lot of security on the dollar's perspective. So below that, this is a risk area, and the risk on area, the markets will be doing well, and we are going to see what we are going to see, what we have been seeing. In any case, the 2 year and 10 year have not moved much. Yeah, it's understandable. The US is still close to 10 hours to open. So it's understandable there is no action happening in these things. So that's why it's stagnant. In any case, we need to follow them as well. So for them, we don't see the for one the 10 year going like too far beyond these levels. So I would understand. I would think this would be this these areas would be very much acceptable, even if it can test these levels. That's a very great deal. That would do a very great deal for the dollar and subsequently the bearish side of the market. But that doesn't mean that we are having a bearish focus, but because we are too far extended on the bullish side, uh, opportunities there are less. Of course, I'll talk about how we can trade them as well, but for now the bigger opportunities lie on the downside, so we are talking about that as well from these perspectives. So the 10 years can continue lower. Obviously it can continue lower since the market has shifted to a new kind of a trend, where the Fed day is done, and that tightening and uh, like the actions against inflation has gone significantly be, into the back end of the tasks at hand. So let's see how the next 15 days, 17 days, the market reacts. The end of the year and the new year is generally, as I said last like at the beginning of the month, is generally very bullish. So the Christmas rally is really a thing. But we have to also be aware that the market, where the markets are, they are not in very favorable areas at the moment. In any case, gold, as we expected, is down to 2023, 2022, 2020 areas. So gold is already at a pretty high level. not too far from uh, the stabler highs. I think, yeah, the whipsaw high of 2050 is beyond reach at the moment. But yeah, the stable high around 2080, it's still very close to it. And what this tells us, like, the risk on markets and gold doing very well together, is uh, is uh, is that the market players are acutely aware of the risks. So they are aware of the risks, and they are still exploiting the risks. So gold has been in these areas for a long time now. So obviously the market is aware of the potential of different kind of risks, geopolitical, we can say geopolitical, you can say other fundamental, and economical as well. So the productions levels in the US or in other parts of the global economy has not been great, have not been great for a long time, for a couple of years now. So the market is aware of that, and that's why the gold has had some sort of a consistent interest, which has kept it above these in these certain low areas and near the all-time highs. But the Liscon markets are also doing great. So that's a quite a concerning thing. And since the markets are all at all-time highs, Nasdaq reached all-time highs. So that's a concern, and we had to be on the lookout, because it will stop at a point. It will stop at a point in the next month or so. So that's what we need to be aware of. That's why we need to pay attention to different sort of things in the market, and follow the different prices on the yields and the dollar, and uh, individual stocks as well. So the US 30, yeah, it's done really spectacularly. As you can, that's, I think you can say, a lot of good trades throughout the last 3 months on the upside since October, and it's gone haywire totally from 32, 33 levels to 37 plus, is more than 10%, 12% return in just a couple of months. Yeah, it's done really, really great. But uh, like I said, these are the areas we need to be ready. We need to be very careful. We need to watch the prices, and since the price seems to be already slowing down, it just may be similar situations like this. It says a breakout and rallies again. Yeah, that's certainly possible. We are not saying that the markets is going to reverse 10% just right now. I think what I'm trying to say is that a deeper pullback is going to happen sooner than we think, and we need to be ready for that. So the US 30 is all big stocks and all stable stocks, mostly. Also, they are like weight adjusted, so there is no imbalance there. But in Nasdaq, we can certainly see further pullback with one or two particular long, like, big stocks doing really bad, and I think, yeah, that puts that much more risk in Nasdaq, and because it's a under stock index, the probability of that also increases. In any case, Nasdaq prices have not been as smooth as US 30 maybe, and there has been a lot of sideways movement, which I think would be the case at this point as well. But yeah, you never know, it can certainly break out. We need to be aware of that. The critical marks for this Nasdaq would be at 16,400 and 16,600. So short term, if the prices are below 16,600, we can try to exploit that. But the Fisher, as we can see, if we can change it to 21 as well, it will be bullish. It would be like very bullish. So if a breakout happens, we trade that. But if a breakdown happens and the price like like it is, it's on the negative super trend. But yeah, Fisher is very bullish. We don't have to do anything. But yeah, if it's breaks out of this 700 mark, 16,680, 16,700, then it's a trade. Not a particularly good one, I would say, but it's a trade nonetheless. Yeah. Similarly, S&P as well. It's 500 stock index. So there is bound to be sideways movement, like it has been in for the last 2 days. Bound to break out now, and might present a good trade again. Like I said, yeah, it's not that the trend is done, but we are closer to a pullback than we have been in the last 2 or 2.5 months. So we need to be aware of that. Yeah. 5,000 round would be a pretty good stopping point for this as well. But we are very far from that. And if we look at all-time highs as well, so that's the mark over 800 something. So it's gonna pull back at that level. It should pull back at this level. But yeah, it's if it's broken, it can quickly rally as well. So tricky situations as well on S&P. VIX is curiously lower. Let's see. Uh, any pullback and this VIX is gonna spike, and we have to be ready about that. We can't do anything, but yeah, it's a good. If we are trading a 3 month contract, it might be a good entry because VIX is gonna spike to 16, 17 at some point in the next month or so. Oil, yeah, pretty good situation in oil as well. So oil is holding that pattern. It broke down for 1 or 2 hours, but yeah, it quickly got back up. Sent a signal at last, like ending uh, 2 or 3 hours, sorry, 4 hours before the US end, US close, and then it's been holding above 72, opened above 72, uh, and it's holding flat. Let's see if it can push back, push forward, uh, like we talked about in last week. So the 73, 74, 75, all these are good areas, good round areas for the price to target. And it's on a trend. It's on a super trend. It's on a Fisher. It's against, not against anything. So you just need to watch. Natural gas, as we talked about, yeah, pretty good trade. Couple of chances to re-enter. Uh, so it started here, broke down, got a chance to re-enter at Friday. Again, a chance to re-enter at close. But yeah, this is a little bit harder to enter at a weekly close. I think, yeah, anything can happen on the weekends, and it can open lower or it can open higher. I would not say this should have been taken. We do not need to take such trades. But yeah, this was certainly an opportunity, and yeah, it's gone up. It's going to go up. I think to the 2.58 levels we talked about. Uh, then we have to see what it does. Bitcoin, yeah, as expected, has done quite mm, well on the bearish side, and I think yeah, 40,000 mark test was on the cards, but it didn't happen. It bounced back from sorry 4765. So I think yeah, it's still on the cards. Maybe a test or retest of 41,350, and then downside. But well within our forecast and outlook for the top crypto. But yeah, we didn't have a good trade in this period, except for this one, the current one, which started around 41 350, I think. Not a very good trade. Other trades closed mostly flat. Mm, in any case, yeah, Ethereum did well. This was a pretty tidy trade on its part, 2.2%, not bad. Current one is also good, uh, from 22. Yeah, it's close to 2% again. Let's see. This 21 25 will be on focus, and then I think more of a it's more of a question about how much is left on the tank and how the dollar does. It's trickier, but yeah, I don't think it's going to go too lower. Maybe maximum 2070, 2050, these areas. So I think yeah, it should bounce back on these levels. Not not much farther than that. Let's see.